What's up, gang? Zach here from the Trading Network. I hope you guys are doing well. I am back with yet another scalping video slash trade breakdown, and this is an interesting one because this was on FOMC day. And if you guys are familiar with how things work, especially when news comes out, typically we have a lot of indecision and choppy price action the whole day until we get the numbers to drop or the news events to occur, right? So in this case for FOMC doesn't happen until late in the afternoon, right? It happens at 2 p.m. Eastern time, which gets a lot of traders antsy to get into trades, and a lot of times they get chopped up and destroyed before the actual moves happen. So shout out first and foremost to Monkey Gains from the TTN private community, as he worded it very, very eloquently, where the real open typically doesn't happen until the news drops on days, where we get CPI prints or the FOMC press conference happens, right? When good old Jay Powell gets on the mic, that's when the real magic happens and opportunities start to present themselves compared to, the choppy price action that is before that, okay? So what we do in the trading network when these days happen, which are inevitable, we must treat them properly. If we're not going to just, sit out the whole day, I would strongly suggest at the very least back testing some days when we have CPI and when we have FOMC, right? FOMC, typically price will be very, very choppy until Jay Powell gets on the mic. As soon as the press conference starts, things get a little wild. There's typically, a very huge volatility spike right when the conference starts or when the numbers drop, and then price will go back to operating technically. So what I like to do is I like to wait for the numbers to drop. I like to wait for the press conference to start, and I watch and see what price starts to do after that happens. Things, I don't want to say calm down, because they certainly don't calm down. The volatility is present and it is extreme, but that doesn't mean that price is not extremely technical as well. So you'll see here that this was a trade simultaneously on ES and NQ. I put a lot more size on ES, and I think I had 1 or 2 contracts on NQ. And unfortunately, because I was so, in tune with the charts and the price action itself, I didn't click record on this until I was already out of the ES trade and almost exiting the NQ trade. But we're going to break this down, and you guys are going to be very familiar with this setup. It was an opportunity zone short. It was a break and retest of major market profile levels and presented some great opportunity for me to lock in about $4,400 in a matter of minutes, okay? So I'm going to click play here, and I'll show you guys first and foremost. You can see that I was in for 1 contract here on ES, right? I was short at the break and the retest of the initial balance low, as well as the overnight low, as well as the New York opening range low. I flipped over, and you can see here, here's the ES trade. I was in for, I believe, 6 contracts. Let's see. 4, 5, 6, 7, 8. I was actually in for 8 contracts on ES and 1 contract on NQ. So you can see very, very similar situation here. We have price reject the initial balance low as well as the opening range low. Price moves down and puts in a little bit of divergence here, and then puts in you could call it an equal high or a slightly lower high, which is where I entered as well. So I entered as price started to break the overnight low, and then I added 1 more as price put in another lower high after that, right? So this was a tight consolidation area, and it was what I refer to as a do or die area, right? If price can't hold this overnight low, for example, then we are very, very likely to get a move down to our next major profile level, which in this case was the value area low from the 13th, okay? So this offered up a 10 to 15 point play on ES, which is a big move on ES. And you can see that once again, as soon as we broke these lows, it was basically a free fall down to the value area low from December 13th. So what I did in this trade is I waited, and I had very good risk to reward, because I knew that if this level didn't hold up, and we couldn't get back above or back into the New York opening range, as well as back into the initial balance, which was above 40.51, that we were very likely to revisit these lows, which had extreme confluence with the value area low from the 13th at 40.30 and even lower. We had another range low from the 13th at 40.26 there, and then we had another low of an S1. We had the overnight POC I'll start here. We had the overnight POC at 40.21. We had we had made new lows on the day of the 14th, right there, 40.22. And we also had Fibonacci pivot S1. So amazing target levels for me to look towards if this trade was going to play out. So you can see I was in at an average of, call it 40, 50-ish, 40, 47, something along those lines. I had a stop loss above this swing high here, and I was targeting these levels: prior swing lows, value area low, S1, right? And this is how you can wait, and you can be a sniper and wait for your setup and pounce on it as soon as it presents itself. Check out this trend line that was created. When you have a diagonal trend line, or what we call in TTN a probe that coincides with a major level like a market profile level, it makes that area hold that much more weight and that much more important. Okay, so if this level doesn't hold and we can't get back above this level, we are very, very likely to continue to move down. So that was the trade idea here. It was also in the 1,000 tick opportunity zone, but you can see on ES, the opportunity zone was not as clear in this situation. Okay, on NQ, however, it was indeed. So I got short, very, very similar situation. We had bearish divergence here, right there. Then price came down. We could not get back above the overnight low from December 13th at 11,920. So that got me short. And I had, once again, amazing risk to reward. You can see that my stop loss was above 11,930. I was in at 11,910, right? So a wider stop loss, because when we have news events, price is more volatile. It's important to size down so you can really adjust accordingly to how price is moving, right? You never want to have a static 10-point stop loss or 20-point stop loss or 25-point stop loss. You need to have areas of protection. My level of protection was above this swing high and above these market profile levels. Once again, my if-then scenario was, if price can't move and hold back above this level, we are very, very likely to move down into this area where we have stacked up market profile levels, where we have Fibonacci pivot S1 and a great target for a short. Sellers gained control after the FOMC announcement or the press conference started, and I allowed momentum to do its thing, and I just hopped on the side of the big players, which is what we like to do. We want to make sure, and we want to ask ourselves who's in control right now, and then do our very best to position ourselves on the side of control. So one thing that I did want to point out about this trade in particular on NQ here is I had some great exits on the ES trade, of course, basically closed my last two contracts at the lows. But on NQ, one thing that I could have done better is I could have manually closed here on this local low, right? And the local low would be this bar closing above the top of this prior bullish bar, of course, after that test of S1. Could have also had a target set. But a lot of times, I'll set my stop loss and I will wait for the market to tell me when to take profit. And on this one, in hindsight, I could have closed a little sooner. As you'll see, me fast forward, I allowed price to come up a little bit into the op zone, and then I just ended up closing my trade there for, it was about, let's see, about $1,000, 990, something like that, for a total of $4,400 just in a matter of minutes, right? So I was entirely flat the entire time. The entire day before that trade, or before these trades that I just showed you guys, I was up a solid $0.00, right? So I waited for my edge to present itself. I leaned into the trade on ES especially, right? In for 8 contracts up here, tight stop loss, and then just allowed price to work for me. Did the same thing on NQ. You can see that I really didn't even start trailing my stop until price was, around the area that I decided to take profit at. So I tightened that up. I ended up closing with that buy stop limit order, and I was out and locked in a matter of $4,400 in just a few minutes. So you can see here on ES, if you look at the time scale here, and it might be a little bit covered up by these video controls, but I entered here, and that was, let's see, can I draw an arrow down here? That was right around 12:06 my time, right? I was out of the first contract, 12:07, the first 4 contracts. So I was out 50% at, 1 minute after entering. I was out for another 2 2 minutes after entering, and then I was completely out of the trade less than 3 minutes after entering. So if you look at the time scale, this huge move happened in a matter of 2 to 3 minutes. And that's how it goes. If you wait for your setups, if you understand how this liquidity is working in your favor, if you see these probes and you wait for them to break, especially to the downside, stairs up, elevator down. And I was able to hop in and ride that elevator all the way down to a very, very high probability area for a bounce, which was S1 in the overnight POC. And I pulled my profit in there. And of course, on NQ, didn't get as great of an exit, but still was able to lock in, $1,000 on one contract, right? So my entry was 11,910 right here, and I was out at 11,860-ish, right? You guys can do the math there. That's a big old trade on NQ and a big old trade on ES at the same time. And I believe price, you can see price continue to mess around in this area. It did end up putting some higher lows. So in this example, especially on ES, I took profit at pretty much the best possible area in this little trade sequence here. So I will not extend this video much longer. Once again, I just wanted to break down these confluence factors for you. I wanted to show you guys how simple it can truly be if you are paying attention to your edge, if you are trusting your edge, if you are trusting your levels of invalidation or protection, right? So just to be clear here, my level of invalidation on this NQ trade was the initial balance low right here, which is why I had my stop right here at 940. And the level of invalidation on the ES trade, let's pop over to that right here, was very, very similar. It was also an initial balance low level coinciding with an opening range low level, also lining up with some swing highs there. So great risk to reward, planning out your trades before you take them, planning out where you're going to put your stop loss, where you're going to target, or what area you're going to look for price to move to if the trade plays out in your favor is so valuable for maintaining confidence in your edge. So many people will get in, and as soon as they get in, they're looking for when they should exit because they don't want to experience the pain of price moving back and stopping them out and taking away their profit. Sure, I'll take profit. I'll take, 25, 50% partial profit in certain areas that are likely to see bounces, but I am working on adding to my trades. I am continuously, throughout my entire journey, working on trusting my edge, holding my trades as long as I possibly can until the market truly tells me to exit, right? We had a local low here, so I took some profit on the local low. We reached the major level, took more profit on the major level, closed the trade, and that was it. So I hope that, once again, that this stuff is valuable to you guys. I always like to say that I'm not showing you guys these videos to, flex about how much money I can lock in a short period of time. I am making this content to show you guys how simple, once again, it can be to trust your edge once you have clear and concise systems. We have very clear parameters for opportunity zone trades. We have very clear parameters for pro breaks. We have very clear parameters for momentum flips, our ranging strategy. And if you guys do not have clear parameters, or if you don't have strategies that you're using to trade with, check out the Fundamentals of Futures Trading course. I give you clear and concise parameters for both a trending strategy and a ranging strategy, and even a reversal strategy, which we call the 3-step shift, which is actually very similar to what you see here, where you have bullish divergence and then a very clear higher low, and then you get follow through on the reversal. So with all that said, if you guys are indeed finding value in this content, I would greatly appreciate it if you would like, subscribe, and click that bell notification to be notified every single time that we post videos here on the channel. If you guys would like to learn more about what we do here in the trading network and how to join our private community, once again, this trade was taken live on stream and called out, broken down, and we've even had some comments, from group members that said that this was the greatest trade that they have ever seen taken live. And I greatly appreciate, all of the love that we receive, both on the YouTube comments and from the folks in our private Discord. But, the greatest way or the quickest way to learn how to do this yourself is, by watching and asking questions. People were asking me questions, and we were talking this setup out the entire time that I was planning it, that I was looking for breaks of certain levels, that I was looking for the break of the probe, that I was in the trade managing it. Everything that happened in this trade was talked out and discussed on our live stream. So if you want to learn more about joining our private community, check out thetradingnetwork.io, where you can, of course, purchase access to our most popular product, the Pro Trader Bundle, which includes our Fundamentals of Futures Trading course, the proprietary indicator package, as well as lifetime Discord access. You can purchase those products standalone on our website as well, in addition to one-on-one mentorship with me, where I have a 4-week program and a 10-week program. 4-week program consists of 20 one-on-one 1-hour Zoom sessions, and the 10-week program consists of 50 one-on-one hour-long Zoom sessions as well. I want to thank you guys, as always, for taking the time to watch this content. I greatly appreciate your time, and I look forward to seeing you in the next video. Cheers.